Ron DeSantis out of Florida making a really big move, putting his money where his mouth is, so to speak, pulling $2 billion out of BlackRock. BlackRock is like the biggest fund that runs all the money out there. And Florida just handed them quite a blow. This is big, big news. Hello, everyone. Welcome to the program. I am Trish Regan. This is the Trish Regan Show, portions of which are brought to you by Legacy Precious Metals. There's never been a better time to invest for the long term in precious metals than now. So go to legacypminvestments.com for more. Again, legacypminvestments.com for more. Okay, this is a big deal. So there's a firm called BlackRock. If you haven't heard of it, you need to know about it because it's like the biggest money manager in the world. Like the assets under management of this company basically are like half the size of the US economy. Like this is a big, big deal firm. And it's also a big deal in that it has really led the way in terms of the ESG investment stuff, the environmental, social governance stuff. The stuff where you basically get red, green, or yellow on your trading platform if you're somebody who's looking to invest in certain funds because you need to know whether your client is going to go for it. BlackRock has really led this initiative. In fact, the guy who really was responsible for it, Brian Deese, is now actually the head of Biden's National Economic Council. So you can see the sort of coziness, if you would, there. BlackRock has made a lot of money, let's be clear, on this whole ESG thing. And I think their belief has always been, well, we want to encourage this environmental social governance. And one way to encourage it would be to make it really difficult for people to make money if they're in these traditional vehicles, like, say, an Exxon. So consequently, it becomes harder to invest in, say, an Exxon if you're running a fund. And as such, BlackRock has certainly made a lot of money off of this particular niche. The problem is Exxon makes money, right? Like, I mean, you still need oil. So at what point do the sort of political persuasions of various fund managers get in the way of pure raw capitalism itself? I mean, it's a very interesting question. And I would also say it's somewhat hard to go up against a company like BlackRock because it has so much money under management. Again, $10 trillion. That's the level they hit this year. $10 trillion is basically half the size of the U.S. economy. This is a big deal money manager. But Ron DeSantis is taking them on. The governor of Florida is pulling $2 billion out that's under management there from Florida. You see, they run a lot of big pension funds for states, for unions, you name it. And he said, okay, we're gonna pull it out. $2 billion because Florida is opposing the asset managers' environmental, social, and corporate governance policies. The state's CFO, the chief financial officer there in Florida, said on Thursday that he would be removing BlackRock as a manager for about $600 million in short-term investments and have its custodian freeze another $1.43 billion in long-term securities with the firm. I cannot state enough how big a deal this is, because when you have money managers that have what the Florida guys are calling woke agendas that are getting in the way of actual investing, the only way that starts to change is when companies, individuals, unions, state governments take that money away and say, wait a second, this isn't really working for us. So if you start to see more of that, it will be incredibly interesting. The scary thing, of course, is now you're politicizing Wall Street in a way that I don't think is healthy for the country. I mean, what are we going to have, like red banks and blue banks? Red investors and blue investors? It used to always be that Wall Street was just about investing, just about making money. I mean, capitalism, that's the beauty of it, right? You don't need to be so viciously political. But that could really start to change. which maybe in the long run will have the effect of getting the politics out of the money management business. That's what I would hope, because I think there's a lesson in all of this, that there's no place for political agendas when it comes to making money. Very interesting stuff. Watch it. Watch Ron DeSantis. Ron DeSantis is definitely making a lot of noise and definitely seems to be very interested in 2024. Okay, we got a lot I want to get to today, including some of the Fed stuff. I've got some guests coming on the program to talk about investing in real estate, even in light of these higher rates. But I'll tell you one thing we all know. As we continue watching these inflation numbers come in, including the Consumer Personal Expenditure Index, which just came out, showing that we're still up 6%. America's hurting. The America we all love is hurting. And people are worried about the future, understandably. But I do think it's important to remember, especially if you're a senior, if you're older, that you shouldn't lose hope. Because, we've been here before, right? We always come through. Let's hope we do again. But, our chances of coming through with something better on the other side, those chances are improved when we work together. And it's one of the reasons why I wanted to tell you about AMAC, the Association of Mature American Citizens. AMAC exists to enrich the lives of seniors, to uphold the freedoms that I think all Americans need. And we want to continue fighting for some of these conservative causes that really, really do matter. AMAC membership, which by the way only costs $16 a year, so well worth it. It includes discounts on hotels, restaurants, cell phone services, much more. And my friends over at AMAC, because they're a bunch of very, very smart people, they offer advisory services on things like Medicare, financial planning, Social Security. It's kind of like the AARP, but for a more conservative, mature citizen. Anyway, becoming a member of AMAC, it's easy. It costs only $16 per year. Go to amac.us/Regan to sign up today. Anyone can join. So what are you waiting for? Go to amac.us/Regan and join others, millions of other AMAC members who all care about the same thing. We want to work together to get America back to where America needs to be. amac.us/Regan. Again, amac.us/Regan. Okay, I promised you I had some good stuff coming up. So I want to cut to the tape right now. Just earlier, I sat down with my good friend, Charlie Dombeck from Key City Capital, to talk a little bit about all this craziness. Key City Capital, one of the sponsors of the program. Here's what he had to say. Charlie, it's good to see you have a friend as well with you. Charlie Dombeck, welcome to the show.
I do. It's great to be here, and I have Josiah Tripp, who is in charge of our luxury property division here, primarily in Southwest Florida, and he'll share with you some deep insights into this market and where we see great economic opportunities moving forward, and share with you how we pivoted our existing portfolio during a time where we experienced a significant disaster and major renovation work in our portfolio here.
Josiah, hang tight, because I just want to ask Charlie a couple of big, broad questions here before we get to what you guys are doing there in Florida. But Charlie, we heard from Jerome Powell, and the market seems to think, they already kind of thought they'd only be getting 50 basis points in the month of December. What's your sense of where we're really heading right now? Because there's been a lot of euphoria, a lot of people thinking, okay, equities are really good now and things have looked okay since October, but I'm not buying it. What about you?
Yeah, I'm not buying it either. Look, the markets have recovered about 10% of what they've lost. And this is great news for many of you who did not reposition your portfolio during the most recent cycle, and you've recovered a fair amount of what you've lost, but there is still significant risk in the marketplace today. And here's why I think we're in a situation where you have to be very careful. One is, if you look at the yield curve, the relationship between short-term and long-term interest rates, the disparity between short-term and long-term rates is greater than it's been in decades. The yield curve is one of the leading indicators that is a strong predictor of a recession. And based upon the data that we're seeing, there's still significant economic threats and the threat of a recession in the next 12 to 18 months. And what I believe is true is that people need to be very careful in terms of reinvesting and positioning capital in today's market environment. And the reality is, when the Federal Reserve makes significant interest rate increases and changes, the reality is those changes don't filter down into the economy oftentimes for 6 to 12 months. And we've had rapid interest rate increases in the last several months. And I don't believe our economy has fully reacted to those changes. And all of the data suggests that purchasing indexes are off and that we have a real problem coming up in our economy in the near term.
I think what you just said, though, is something that has gotten lost in all this. That 6 to 12 month, 6 to 9 month, that window, right? People forget that. They think it's like instantaneous. But here we are, we're just beginning. We're not even beginning to feel the effects of what they've done.
You're absolutely right. We've all kind of forgotten what's happened historically in previous interest rate cycles. And the reality is it's been several years, almost a decade or more, where we had significant interest rate increases, and people forget what happens in the economy 6 to 12 months later. And I believe our market's priced in the 50 basis point increase that the Federal Reserve is going to implement in December, but they reacted like it was great news and we're out of the woods, and the Dow went up by 700 and some points. But again, I think it's short-lived, and we have to be careful in terms of reinvesting in equities at this time. In fact,
I do think that
stayed in, you've recovered. My recommendation and thoughts are maybe it's best to preserve some of that capital and take it off the table today and find assets that represent a store of value and assets that represent cash flow and income. Those are the things that I think worked well today in the current environment.
Okay, with that in mind, so a lot of people are like, okay, well, is now my chance to get in on housing? And it's tough, right? Because rates are now way higher than they used to be. So it's a more complicated environment. I know you guys at Key City Capital, you've found a little bit of a niche, though, given the unfortunate event there, the hurricane as of late. So walk me through where are you in the Fort Myers area today? Is that right?
Yeah, I've been down in Naples and Fort Myers and Cape Coral, looking at the renovation work that Josiah Tripp here has done on our existing portfolio, and really carved out a great cash flowing portfolio in the environment we're in today, where there's a lot of renovation work going on. And there's frankly a tremendous amount of need for short-term housing for people that have relocated here because of the disaster, contractors, insurance adjusters, the entire community that is here to rebuild the community. So Josiah will talk a little bit about what he's done with our portfolio to really improve cash flow and create an income in an environment where it's very challenging for most people to earn a rate of return.
So Josiah, welcome. Good to see you. Good to meet you. Tell me about what you guys are doing then. I imagine you're looking for property, you're renovating properties. What's up? And by the way, I think we've seen, as Charlie was speaking, a few of these, if people are watching on YouTube or on Rumble, if you're listening on Apple, iTunes, or on Spotify, make sure you go and watch as well on my YouTube channel. But anyway, you can see some of what you guys are up to. And I'm looking at some demo that's gone on and actually some improvements in some of the properties as well. What's happening in that area?
Hi, Trish. Well, it's great to be here. So obviously when we were faced with this disaster, there's two sides of the equation. The first one was, what do we do with our properties that have gained significant damage? How do we make up for the loss of income and with a property that's not fully functioning right now? And what we saw was that because the amount of homes that were decreased and completely destroyed from the hurricane, there's so much lack of housing. And you've got tens of thousands of workers from all across the state that were coming down here. You've got families from Fort Myers Beach, Sanibel, that all need temporary housing while their homes are being fixed. So that was my first inkling, was that we need to find a customer that's not our normal customer, because our normal customer wasn't there. Our out-of-towners, our vacationers, they weren't coming in. So we looked more local, as well as from the construction side. So I reached out to a few of the bigger companies that I knew that were coming in the area, and the response was overwhelming. I mean, we had people willing to pay triple what we would have gotten during a normal month of vacation rentals just to have a place for their workers and their families to stay. And that's how we've been able to battle that side of the loss of income. Is it's actually been an opportunity for us. And the other side of this disaster is always in crisis, there's an opportunity. And that opportunity has been the fact that property that you could never even get your hands on in near the beaches, on the beaches, that you would have had to pay millions and millions of dollars for, is now easily accessible if you have the funds and cash ready to go, and people are offloading them. I mean, they're calling it quits and they're giving up.
Wow.
And that's
So
that's
this is this is your opportunity for your fund to be able to get in there, even with the higher rates, I guess. If people are just over it, right? They're done. They don't want to be at the beach. That always changes. But, people are investing with you guys to know how to do. For those that have the capital to put to work, it is pretty beneficiary. As we talk about this overall economic environment, one of the things that Florida also has benefited from is that they didn't quite have the downturn, if you would, or the joblessness rate that the rest of the country saw. I guess I would just ask, Charlie, do you anticipate that continuing in the future as we move our way into 2023?
Yeah, look, 3 years ago, we sought out and chose very specific geographic regions that we were targeting from an acquisition perspective. Mm-hmm. Those jurisdictions primarily were Florida, Tennessee, and Texas. We are still seeing a massive influx of population into these jurisdictions. And the Florida economy is very healthy. People are still moving here. We're going to continue to see job growth. I do not believe we're going to experience much, if any, of a downturn in these markets in which we chose to invest in. We did a lot of research. They performed exceptionally well for our investors. And what I would say in this environment today here in Southwest Florida, we were able to get our properties up and running and rentable within a handful of days. And that's because we're a vertically integrated company. We have our own construction teams. We have our own contractors. We were able to get on the job very quickly and get the properties back up where we could rent them back out. And we were first to market.
Well, I mean, it's great that you were able to do that, for sure. And I think is a testament to the business and how fluent you guys are in having done that work in the past. So good things ahead. Good things ahead. Hopefully the Florida economy will continue to hang in there. And Josiah, it was lovely to meet you.
You as well, Trish.
Great to meet you. Charlie, we'll see you soon. Thanks so much, as always.
Thanks for having us.
Good
All
stuff.
Right.
My thanks to Charlie and to Josiah. Great to see both of them there. Look, there's a lot going on right now. There's going to continue to be a lot happening, and it's all about how you position yourself and how you take advantage of certain opportunities. You can learn more about Key City by going to keycitycapital.com today or keycitycapital.com/Trish. My name, one of the wonderful sponsors of this program. So do go check them out. We got a lot more going on that we have to cover. We have to cover this week. It's a very big week. And as I said, a lot on the economic front that will continue to go and come forward. But I don't want to leave you without giving a quick mention to my friends over at Rough Greens, roughgreens.com. You know Fluffy. Fluffy's on the show a lot. Fluffy is my little Maltese dog who goes with me everywhere and that I really cherish and I care so much about. And it's one of the reasons why I want to make sure that he has the healthiest food available. And I've been able to do that, thankfully, all because of this one supplement I found, created by naturopathic Dr. Dennis Black. And Dr. Black feels very passionately about everybody being healthy, including dogs. He's got a couple big ones himself. And so he created this. It's got all kinds of digestive enzymes. It's got minerals. It's got vitamins. It's got all the things that your dog needs to really take that dead food that's in the store shelves and make that come alive. So you just sprinkle a little bit on top. It's like a magic hot sauce, if you would. My dog Fluffy loves it. And suddenly everything tastes great once he's got this on there. So get a little Rough Greens for your little one or big one. Today, I encourage you to do this. I think your dog's going to love it. And by the way, Dr. Black has a free trial bag that you can get, friends of the show, of the Trish Regan Show, can get by just going to roughgreens.com today. Again, it's rough, R-U-F-F, greens.com. Get your free trial bag. All you have to do is pay for shipping. And I think you'll love it. I'll see you tomorrow. Have a great day.
Hey, little guy. Hey there. Hey there. How you doing, baby? Good day? Good day so far? You like hanging out in Mommy's office, don't you? Do you? Do you like hanging out in my office?